All right, weekly outlook for week 3 of November. We finally have some news on the horizon. I cannot believe it. um, yeah, so the government shutdown should be over. I do see this folder here popping up as tentative, like they have been during the shutdown, but I'm gonna just assume that this is gonna turn around to actually release. Um, yeah, let's hop into it. So, Monday, no news. Tuesday, no news. Classic. Wednesday, we have FOMC minutes, which obviously, I mean, that's kind of like a nothing folder, to be fair, but you know. Um, then on Thursday, shit gets interesting. We have um, earnings, non-farm employment change, so not NFP, but the pre-NFP folder usually, but there's no NFP, it's just this one. Unemployment rate, and then the unemployment claims are tentative. So maybe those as well. And if they do come out, I'm pretty sure that it's a 8:30 folder, right? So that would all be at 8:30. So a pretty heavy 8:30 drop with or without the unemployment claims. It would make it a little heavier, obviously. What does it say? Release data delayed by 48 days. Okay, so this is delayed data. So maybe it won't actually be as impactful just because it's like old. You know what I'm saying? And then we have here uh, a double 9:45 a.m. PMI folder on Friday. So that's the dollar news, right? And if we quickly add in the majors, the pound and the euro, we have pound CPI on Wednesday and retail sales and PMI for both pound and then for euro as well with the PMI on Friday. So that adds a few folders, which is low-key nice to see as well. So yeah, that's all something to keep in mind. And without further ado, let's hop into the charts. All right, now starting out on dollar. Last week we retraced into the weekly gap that we formed there. Now we did close above consequent encroachment, so that's like decent for potential bullish signatures, but in my opinion, we're gonna see some bearish price action on dollar next week. Yeah, I don't think that this weekly gap is gonna hold. That's just my thought process. If it was, I would have wanted to see it like have some energy out of it last week. Instead, we just kind of chopped down into it on dollar, right? This daily chart. So obviously, not much going on the daily chart. But you know, I mean, we do have this daily gap all the way up here, but I actually wouldn't want to see this traded to. I'd want to see this be a breakaway gap for lower prices. And the reason I say that is, if we quickly, Jesus Christ, that's pretty loud. I don't know if that messes up the audio, but we'll see. Anyway, if we scrub down to euro here on the daily chart, we can see that euro has a small little daily gap resting there that we formed basically yesterday. This is Saturday, so we formed that on Friday. So, in my opinion, I'd look for euro, right, to use this daily gap to run this buy side here. So, with that in mind, it makes sense for dollar to be bearish as well. Now, I'm going to just get rid of these two old daily gaps because there's really no reason for them to be here. Yeah. Also, obviously, euro does not have a weekly gap, so there's no thought process of that happening on euro. And I guess the main reason, essentially, behind my thought process of bullish majors, bearish dollar, is literally just pound, bro. Like, we reach into this monthly gap, right? Monthly equal lows at the monthly gap, purge them. And we have monthly SMT with EU inside of that gap. So, like, it does not get much more juicy than that for a potential reversal. Then we have a bunch of low resistance liquidity on this push lower, right? We pushed lower in a very choppy fashion. And we have like relative equal highs up here as well on pound. So I'm seeing pound super bullish. Now last week we played out a nice little move from this daily gap that unfortunately did not give a trade. But what I'm looking at going into next week mainly will be this euro move here. And while that is true, right, we are in a weekly gap on dollar, we are in a weekly gap on pound. If we drop to the 4-hour chart on pound, there's nothing in price yet to suggest a nice setup, but if we get like a weekly consecutive candle SMT with EU and 4-hour order block of dreams, right? Like if the setup's there, the short's there, right? Regardless of what I think is gonna happen, at the end of the day, this is a more mechanical model than it is like objective or subjective, I mean. But yeah. So that's majors. My expectation is bullish. I want to use this daily gap for a potential setup, but I am keeping that weekly gap in the back of my mind as a potential shorting opportunity. So let's move on to indices. Now on indices we have finally inversed the raw fair value gap, so to speak, right? Obviously we have a volume imbalance down here, so there's some leeway there essentially, but in theory that is a inverse. And then if we look at ES, we actually closed, I think, basically the same price we closed last week, which is kind of funny. Nah, well, a tick above, but we closed essentially at the same spot we did last week, which is kind of funny. Now we have an inside week on ES, and we have SMT on the lows, so that is something to think about as well. Dropping down to the daily chart though, here's what I see, right? I'm bearish, right? I'm gonna say, like, I'm bearish. Now that comes with a few specifications, I guess. I want to see this daily gap hold, right? That's kind of my thought. We use this daily gap to continue lower, because honestly, in my opinion, this is like the most sus spot ever. Like, I want to see this taken, because like anybody who just saw the huge 1,000 fucking point sell off on this single daily candle and then just longed it the next day, they're all still in profit, right? I think that dumbass of a play is gonna get wiped out. I think we're gonna take this low, right? That's just my thought process here. Now, what speaks against that? Well, first of all, the just state, I guess, of indices being a underlyingly bullish asset, right? So NQ and ES over time, they are going to tend to trade higher. So obviously they lean more bullish than they do bearish. Now, if they're bearish, right? It doesn't matter anymore. But yeah, that's put into there. So like in theory, I'd rather be looking for longs on NQ, but obviously if price doesn't support longs, I'm not looking for longs. We got SMT on the lows on the daily chart, right? This weekly consecutive candle SMT. Now that also speaks potentially for the fact that we might go higher from here. And we also do have a pretty fucking crispy 4-hour breaker on NQ here off that SMT. But, crispy breakers, they tend to get ran through sometimes. You know what I'm saying? So, yeah. Anyway, that was a little all over the place, I think. To, put my thoughts in a more concise manner, I'd say going into the week, I'm going to be looking to short from this daily gap. I would not be totally surprised if we see higher prices just based off literally just the SMT and the fact that it's indices, right? Most of the time when we have retraces, we really just have minimal retraces into some short-term lows, for example this low right here, which we took last week, and now we have daily SMT. But regardless, with that being said, I would love to see a run into these lows here. So that's kind of what indices is looking like. Bonds has been consolidating. I'll just throw in bonds right quick just because I skipped through them here. They're kind of still consolidating. I like how they're respecting consequent encroachment of this daily gap. I think that's kind of telling. Now, obviously, if we look at bonds and we say, okay, so maybe they're going to be bearish here into these lows essentially now, and then we're like, okay, but that doesn't really support the bearish dollar notion. It's like, yeah, it doesn't. But I guess markets being uncoordinated would also be a hint at something. You know what I'm saying? So, yeah. Anyway, that's kind of bonds. Like, not much to say to them. I guess like the one thing you can say is like they're not necessarily in sync with the idea I have on dollar. So that's something to keep in the back of your mind. Like, market's slightly out of sync maybe, right? Dollar's been selling off and bonds have been selling off. That could be iffy market conditions. So yeah. Anyway, moving on to gold. We completed the weekly internal external move on silver last week. Gold has not. And then dropping down to the daily chart, we can see that off that purge, right? Obviously with SMT, because gold did not hit the external. We have a fat sell-off back down into daily internal liquidity. And if we draw out this range, it's also a discount daily gap here on silver that we've reached down into. And then on gold, basically the same thing, just much more bearish in the sense of the rally being way less. The sell-off was essentially the same kind of thing, but we also respected this daily bearish gap on gold here. And even if we draw out the midline, I'm pretty sure the bodies are respecting CE exactly. So that's what gold did. So what are we looking at going into next week? Obviously, we have to be very aware of this, right? I should just put it to this high just so it's cleaner. We have high time frame SMT, or at least potential for this SMT to stay, in my opinion. What are my thoughts? My thoughts are, we're in this daily gap, right? Obviously, we're going to be watching the hourly chart off a daily gap. We could see a continuation into these lows, and then this be a order block, right? This be a order block, this kind of be the breaker. That would be like the easiest way for this to roll, I guess. Now, the thing on gold and silver is obviously we did draw down into a daily gap, but we also displaced down into the daily gap. So there is a chance we can see a daily bearish gap form on this move down into the daily bullish gap. You know what I'm saying? So if that happens, it's like you're weighing off the validity of a short from the daily bearish gap and along with the daily bullish gap. So it can get tricky here. Overall, I think I would favor long still, just because of the underlying, trend, I guess. Trend is your friend and shit. But yeah, I mean, at the moment, I'm still in the weekly internal external swing on gold, right? We're still in the 4-hour market maker buy model, which is unfortunate that gold didn't, I would have expected, honestly, this to be gold and then this to be silver, just based off how we have been trading. But this ended up being gold, and then ended up being silver. Silver ended up taking over the strength that I was expecting in gold, which is quite unfortunate. We almost filled TP, right? This would be TP here at 2R. And then we put in the reversal and retracement lower. So, yeah, man. But overall, I'm thinking the daily gap is my focus going into the week. And then if we get the daily bearish gap to form, because we don't instantly displace higher, right? I guess the two options are, A, we displace on Monday and we immediately rebalance this essentially and don't leave any room for a daily gap. At that point, we're so bullish, right? That, this daily gap becomes like the daily bearish gap doesn't form and the whole thought process becomes irrelevant, or we kind of more like consolidates in the daily gap and then we have a daily bearish gap. In that case, it gets a little more tricky, and I guess the third option is we get a pretty bearish candle, which could potentially invalidate the daily bullish gap, you know? So, yeah, gold is for sure the most tricky going into next week. Overall, I guess I'm still leaning bullish just based on like, you know, the overall high time frame order flow. Like, I don't see a reason to be the contrarian here when gold has just been so bullish for so long. Now, do we have a high time frame SMT that could potentially substantiate a reversal lower? Yes, we do. Right, and I am keeping that in mind. I'm not like totally like, oh no, gold has to go higher. There's no way it doesn't. I can't believe if it doesn't. You know, like I'm very aware that there is potential for shorts maybe coming into the market here. But yeah, that's kind of what I'm looking at. I'm actually gonna get rid of this though on the chart just because it looks hella ugly. I can't lie, I don't like looking at it. But yeah, I guess that's kind of what we're looking at on, you know, majors, indices, and metals. So yeah, that's the outlook, I guess. Probably some disjointed yapping mixed into there for sure, but I hope kind of the main ideas of what I'm looking for came across nicely.